Burgess and Bolton's weekly wrap-up.
Hello, Ben.
Hello, Jeremy. Happy Friday.
Yes, indeed. Happy Friday. And quite a sunny one.
It's kind of not quite sunny here, but I know it's coming. It's going to be warm next. Summer's here next week, isn't it?
It is, yeah. And the Delegated Authority Strategy Day.
Of course.
More of which later. But for now, welcome everybody to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. This week, we are going to focus a bit on DA and preview the Delegated Authority Strategy Day, which is on Tuesday. Some of the insights that have come out of our pre-event survey, which are quite interesting. I'm sure will frame quite a lot of the discussion next week. And Ben's going to do one of your famous, now infamous explainers. So if you're new to Delegated Authorities, just stay tuned and you'll learn everything you need to know.
Yeah.
But as always, let's start with the news. So a bit of news this week from Lloyd's historic results, Ben.
Yeah, so this is data.
Well,
this is data from ICMR, who've been working with LMA. ICMR, good little company, and they do a lot of analysis of the Lloyd's numbers. And worth a read, this report. I think it's showing the results, as you can see here, from 1950 to this year, basically, or just the end of last year, sorry. And it's interesting. I thought it'd be worth having a little muse of it. I mean, there's a lot of things going on here, and I think you can take this in different ways. So you could say, is this good performance? You could look at it and say, which I will do in a second, what does this mean for the strategies that we look at in the market? ICMR tends to come at it from a very financial numbers point of view. Their interest is to create a kind of almost stock exchange view of the market, because it's notoriously difficult to present Lloyd's, which is quite volatile, obviously, as you can see from that chart. Presented in a way that's attractive or understandable to investors. So I'll come back to that. But basically, I mean, 9-10 billion profit, I think, last year. Overall, so the market's been good, generally speaking. And last year, 2024, it was its best ever performance. So they a 55.5, so 52.149 billion, basically, of gross written premium. And a 5 billion, a 9 billion, sorry, 9.5 billion pre-tax profit. Combined ratio 87%. So that's where the performance comes. Is obviously the underwriting losses weren't so big, the claims weren't so big. Investment return slightly down to 4.7%, and quite a good return on capital of 21%. So it's pretty good overall if you look at those high level numbers for that year alone.
So that all sounds pretty positive, Ben.
It is good. It is good, but you're in a cycle, and so what the ICMR team have done quite nicely is had a look at some multiple charts here, looking at, I just picked this one. So the results from 1950 to 2024, which tells a good story, an interesting story of hurricanes, catastrophes, and poor underwriting, one might argue. So as you can see, 1990, we had asbestos. That was pretty terrible market, nearly pretty much bankrupt at that point. World Trade Center, 2001. At that point, investment income had dropped off quite a lot from, if you like, the 1970s, where the market was heavily reliant. If you look in 1975, to 1980, it was heavily reliant on investment income. I mean, underwriting was completely underwater, and has been really, underwriting has been unprofitable really basically up to 2001. And then there's kind of been okay since. And I think ICMR put on here helpfully the start of Lloyd's performance management. So decile 10 and other things that happened through that period, and various other things that Lloyd's did. So they do say, I mean, their conclusion is that this has been a success story in terms of creating more discipline in the market. But I would say as well, crikey, if you look at it before that, it was absolutely necessary, because it was pretty terrible. So, maybe just computing data, modeling, all that sort of thing got a bit better through that period as well. But as you can see, we still got. I mean, we had the COVID period where obviously there were big underwriting losses then, and Hurricane Harvey, Irma and Maria, California wildfires. So we've still got big losses, and they are going. So the losses, the cat losses are going up. I mean, numbers show they've gone up to 7.8% this year from 3.5% in 23. So you've got underlying concerns, really, I think, around the losses, even if the return on the capital this year was pretty good. But as you can see, there's still also a lot that comes from the investment returns. So if the investment returns go, then you've got, it's slim pickings in the market, really, from an investment perspective. But there was an interesting analysis, 2005 to 2024, 358 billion in claims paid out, 601 billion in terms of premium, costs 138 billion, profit 49 billion. So over the period, the ICMR says it's a reasonably good investment, but it does go up and down. And I think it's a game of two halves there, isn't it? Basically.
Yeah.
I mean, the first half was terrible, and the second, well, if you like, it was a longer half, first half, but the second was quite good. So I think rightly they say that it's a lot of this is down to management and better management of this market. But the market hasn't grown, and that's the other thing that I think is really important. Obviously, from a financial perspective, you can say this is profitable and it's a big market, but it's losing business. It's lost a lot of reinsurance business, as we know, to Bermuda, and it's losing to other markets around the world. So, my question would be, well, this is all fine. You're managing something, but you're managing a declining business. It's not growing. And that's, I think, where you've got to have the concern, because obviously you can always shrink it and make money by not writing lots of things, which would be a complaint in the market. Insurers not writing as much, pulling out of things and being too selective.
Yeah.
So there's always a balance, I think. And the question really is not particularly ICMR's issue, because I think they're saying, is it worth putting your fiver into this, your fiver of investment into Lloyd's? Well, they're saying it probably is, because it's quite good, even though it's volatile, and it's less volatile than it was. But I think it's interesting. It's overall exceeded the cost of capital, but only this year, 24, but only for the second time in a decade. So again, if you're an investor, you go, well, I think I might need a better track record than that to invest. So it looks, you've got a kind of short period of good to look at, but you've got underlying cats increasing and you haven't got a growing market. So there are, as they always say on these things, a few headwinds, I think.
Yeah. So it is interesting, isn't it, that last point about kind of the peaks and the troughs, because as we've talked about on the show, and whoever you talk to in the market, we're about to enter, or we are entering in, or the midst of a softening market.
Yeah.
So do these charts or this data help kind of predict the future, or is it?
No, they don't. I don't know. We should get Marcus on some point to talk about it. It would be great, actually, Marcus Guessman. I don't think they do predict, and I don't think you can do that in any financial market. I mean, we have an extremely turbulent world at the moment economically. We don't know what impact tariffs are going to have on these numbers, and we have just a lot of stuff going on. So I think it probably doesn't tell you much. I think it broadly gives you the general drift that the market is better managed than it was, which is quite good. That at certain points it can make quite a lot of money because it's providing the investment return is there and it keeps on being managed. So so they say on this, it is a truism within this market that historical relative performance often serves as a reliable indicator of future prospects. Utilizing ICMR's estimates of predicted relative performance in conjunction with the aforementioned capacity growth survey, our preliminary analysis indicates that the outperformers are growing their capacity by 17%. So, and the bottom quintile performers are growing their capacity by 14%. This disparity warrants careful consideration, particularly given the corporation's emphasis on underwriting discipline. So what that means, I think, is they're saying there are signs as the market softens that the lack of discipline could come back in. In other words, people start writing cheap. Now, I think, and I'm sure if Marcus was on here, he would say, well, fundamentally, you've got to keep your prices up, not write cheap. And therefore, if you have claims, you can cover them and you keep your profit up. And that's the point of the market. It's just as you said, I think the market dynamics, though, are always that they start writing cheap because they still need to get revenue. They still need to keep the lights on in these businesses. And, you're not ever as disciplined as you want to be. So I guess it depends on the capital movements and the event and capacity. I would argue it also depends on innovation and it depends on products and services and growth. And I think that's where I'd come back to is growth can resolve quite a lot of issues in markets, because if this market doesn't grow, you're left with this. You're left with a cycle. You're left with the investment returns. You're left with things that are largely out of your control, a bit of discipline and all that. So, but once you grow, you can grow new products and build it out. And you can have good profitable products. I mean, maybe they won't all work, but that's where you discover the new profit seams, and I don't think the market's doing that at the moment. So it's
interesting.
It is interesting. I mean, on face value, I think they're saying it's pretty good. But there are some concerns just from a financial perspective and discipline in a softening market. But I think there are wider strategic concerns, which obviously Lloyd's talks about and others do talk about, which is how do you grow a market in London? I do think a lot of players are actually saying Lloyd's is not enough for us now. We are going to expand into global businesses. I genuinely think that's the trend of the future. If you want my take on it, is Lloyd's is just one part of the insurance market. And it's not going to be the be all and end all, and we will talk in a second about some of the things that are happening, around tech and outsourcing and all that stuff, which is pertinent to that, I think.
Yeah, definitely. Good. Right. Thanks, Ben. It was really interesting. Let's move things on, though, to delegated authorities. So as I kind of said at the start of the show, we've got the Delegated Authority Strategy Day on Tuesday. So we thought we'd spend a bit of time just talking about what DA is, perhaps some of the strategic drivers for change. And then I can just pick up some of the themes from the pre-event survey that I'm sure we'll be covering on Tuesday, and we can have a chat about them. But Ben, I thought I'd start by, as I said, perhaps you give us a brief introduction to delegated authorities. What are they, and how does it all work? Does anybody know?
Well, it's annoying to me, most of this, because we both hate jargon, and you could have called yours, to be honest, you could have called it the outsourcing insurance outsourcing conference, and I think you might call it that in future, but for now it's called delegated, which is an odd word to use. So let's just nail this before we start, and I want to bring in a little bit of what was said by the FCA about delegated back in 2015, because I think it's relevant and I think it's important. So delegated is really a kind of legal term. I mean, obviously it means you delegate something to somebody else, right? So it's a legal definition. So it's really outsourcing in all but name. And I think that's exactly what the FCA said it should be called, because they said it's ridiculous to call it all this jargon because it makes it opaque. So let's just put that out there. So delegated authority is a term widely used in the general insurance industry to describe arrangements where an insurer or managing agent delegates authority to a third party, such as an intermediary or cover holder. So there's another bit of jargon for you, cover holder. This delegation involves the outsourcing of functions that the insurer would otherwise undertake itself. Pretty simple. It's pushed it out. It's outsourced it.
Yep.
And outsourcing is defined as the use of a person to provide customized services to a firm other than an employee or governing body member, or an arrangement where a service provider performs a process, service, or activity that the firm would otherwise perform. Again, that's outsourcing. So external delegation is particularly of significant functions like underwriting authority and claims handling is by definition outsourcing and is subject to relevant regulatory requirements. So regulator prefers it to be called outsourcing because that brings it into the general legislation or laws that relate to a company outsourcing. Makes it simpler to understand, I suppose, through the courts, for consumers and so on and so forth. So delegated blah 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 is a bit of a jargony thing that's not been got rid of yet. So the contract that formally outlines the responsibility, entitlements and obligations of the managing agent and cover holder is referred to as the binding authority agreement. Binders, which we all know and hear about. So that's the binding authority agreement. Another phrase that adds more jargon to this. So you don't just call it a contract, you have to call it a binding authority agreement, right? So let's have three words where one would do. And that is distinct from the contract of the insurance itself. So it's not the policy, it's separate, it's called the binding authority. So just to make it more complicated, beyond formal outsourcing, the agreements like binding authorities, the term delegation can also refer to commercial arrangements where firms apportion responsibilities between themselves, which may or may not involve outsourcing. These arrangements can be complex, making the delineation of responsibilities and tasks unclear, particularly regarding those arising from outsourcing relationship versus those from a firm's own role as a regulated entity. So it starts to get a bit muddy, basically. So what I wanted to do then, just to say, look, that's the kind of background, but then the concerns raised by the FCA in 2015, and I don't think most of these have been addressed, to be honest, are kind of many and varied, but I'll just quickly run through them. So key concerns were, the core concern is the increased risk of poor customer outcomes arising from the division of knowledge and responsibility that occurs when underwriting claims handling are outsourced. Now, I have met with the FCA last year, basically. They are still of this same opinion. So they have not moved at all. So the regulator has not moved and is not changed. They're strongly of the opinion that anything outsourced is risky and is a worse outcome than insourced. So that's just, I'm just putting that out there as well.
Yep.
So let's talk about some of the concerns. Lack of recognition and understanding. Many insurers did not appear to regard the delegation of activities as outsourcing. This led to insufficient consideration of their regulatory obligations. That's a key one, right? So they don't even understand they're outsourcing. That's the problem with the language. So this all kind of then plays off the back of it, and I won't go into all these. Into insufficient due diligence, poor control frameworks, product issues. Some insurers are underwriting products designed by others that they had limited knowledge of. Insufficient control over claims function. Insurers exercised only limited control over the outsourcing of claims handling, the choice of partner, and the design implementation of claims processes. conflicts of interest, inadequate oversight and MI, over-reliance on audit. So they basically tick box exercises where they saw that as a substitute for real control.
Yeah.
Unclear allocation of responsibilities. Responsibilities sometimes not clearly allocated. That sub-delegation complexity. So that was when you've got things like service provider networks, garages and things like that, repair shops and things like that. So there's further sub-delegation going on within that. That's something we hear a lot about. Complaint handling risks. They were not, so in other words, they're not properly managed through this delegated process, so that you don't know who you're dealing with, basically, when you're making a complaint. Distribution channel risks. So they have got no controls or oversight. High turnover of relationships. Poor controls and due diligence contributed to high turnover in outsourced relationships, creating significant risks for insurers and customers, particularly if the termination was sudden. Now, that last one is really interesting because I have actually talked to insurers about this, and they've said it is really, really difficult, given the way this market works, the whole delegated space works, to have information and feedback because you haven't got the data, and we'll come on to data in a second.
Yeah.
Because you haven't got the data, you're left with the kind of nuclear option. That's all you're left with, which is to fire the TPA or whatever your third-party provider, get rid of them, and then bring another one in. Which, of course, is exactly what the FCA is saying. Is, well, that's just problematic because then customers are left high and dry often, and it's costly, and it doesn't build proper commercial relationships or whatever. So anyway, those are all the few things that were raised. I don't think most of those have been addressed, properly yet, from my experience of dealing with this. So I think there's a long, long way to go before we get out of this kind of Wild West scenario that we've got in delegated.
Yeah. And I think it's also important to point out that this is not a small proportion of the market. It can be up to 40, some people even say maybe even 60% of some people's books. So it's super important. I think it's probably why we got so much traction for the event.
And it's growing very quickly as well. That's the other thing,
yes,
because it seems to be the model of the future, doesn't it? Which is that you can build out MGAs, you can build out, so it's very appealing because it's an easy entry to the market to some extent.
Yes. And we might come back to that afterwards.
Yeah.
Why don't I just talk a little bit about the results of the pre-event survey, because they probably feed into and kind of develop some of those themes that you've already kind of touched on. So those that don't know, but ahead of the events that we put on, we survey the audience and ask them what they would like to get out of the event and what's kind of top of their agendas in terms of issues and challenges that they would like to see covered or discussed during the day. So I've just taken that research and synthesized it down really into kind of their kind of top challenges. So I'll just really quickly go into these. So the first one is digital transformation and technology modernization. And as it says there, a key concern is retaining cost control over costs while keeping pace with rapid technology developments. So in reality, what's happening is these kind of modern digital tools that are now available provide a fantastic opportunity to rethink their old ways of working. The challenge is how do you bring those new tools into ingrained processes that are very difficult to change, especially as you've just outlined, when they are complicated and misunderstood, even within the businesses that have these arrangements. So that is the kind of the first one. The second is something you've just touched on, which is kind of data quality, transfer, and analytics. So they remain a headache. So poor bordereau quality, inconsistent data standards, a slow data transfer from cover holders are still major blockers. We want to move beyond document-centric bordereau towards real-time data-centric insurance models, improving data sharing, enriching analytics, standardizing reports, and using third-party sources are seen as critical to deliver better underwriting, oversight, and portfolio management. So some of, again, playing into some of those kind of key concerns that you've already outlined, I think people do understand it's not just a regulator or governance issue. I think it makes a difference to their performance. And so that's why data is a big one. Leveraging AI, so AI flavor of the topic of the moment, kind of real excitement and caution around the potential for AI, especially in areas such as streamlining onboarding, automating claims validation, and enhancing governance reporting, and also the kind of summarize of audit reports. So kind of that stuff that Gen AI does really pretty well at the moment and will only get better. You can kind of see how it will play into that. Another area that we're quite often talking about is talent attraction, retention, and upskilling. I think DA is still seen as a kind of neglected part of the industry compared to other areas. But I think that will change for one of the reasons you've just said, which is DA is a massive growth area. And I think you're going to need to attract and retain those people in order to compete and prosper. Next one, transforming operating models and governance. So yeah, delegated operations need to be scalable, efficient, and future-proof. So many people were saying that trying to bring teams along a kind of transformation journey and ensuring governance and models are keeping pace is a real challenge as they're growing, because they're not thinking about this in a strategic way. So these models, operating models and data flows and architecture and all that is kind of being approached in a tactical rather than a strategic way. So I think that's another concern. And then finally, something that always comes up, I put it sixth, but it should probably be first, which is the kind of the bordereau challenge, which almost sums up the other 5 points in one. So I'll just read this out. So bordereau management remains a deep frustration. Delays, inconsistent fields, enrichment by brokers, and system incompatibility all create operational drag. Practitioners want clear moves towards automation, data APIs, and ultimately a static bordereau altogether. So kind of centralizing processes, centralizing data, having standards is kind of critical for real growth and innovation, kind of some areas. Yeah. So yeah, I mean, there's a lot to go at, a lot of obstacles there, some small, some large, some market centric, some individual firm kind of centric, but certainly data quality, transparency, operational resilience, governance, they are all big challenges. So it's going to be interesting next week.
I think it's interesting, again, you don't really see, because everybody's, you're concerned here that all these concerns are, I mean, I'll talk about one of them in particular, but the concerns here are all really about making this work, not about outcomes for customers as well. So that's the big one that's missing. And I know why, because everybody sits there saying, well, we've got to make it work first, and then we'll work out what we do with the customer. But my point about the regulator is saying, well, you can't, you need to think about both at the same time, because, that the business is happening day in, day out, right? So claims are happening, customers are expecting those to be paid and managed properly. So I think there's a real problem. The biggest issue, I think, is that number 2, which is we talked about a few weeks ago at our marketing summit, which is, Murat's talk about, if you haven't got your data all sorted out, AI is no use at all to you, because it's not gonna work. So you kind of got to have a conversation, and maybe we'll talk to people about it on Tuesday, which says, well, hang on a minute, what are the pillars of success, and what do you really need? And it seems to me that the foundational thing is data, really, in all its forms, both the insurance policy data, the claims data, the customer outcome data, all of those things are a massive gap and in a mess, really. And yet everybody's churning forward with this. And I don't think it gets solved the other way around, unless you think differently, Jeremy, does it? Which is to say, let's apply some technology and sort the problem. I think you have to have the data right first and all of that. And you're going to struggle with the talent attraction if it's messy, because they'll say, well, I don't want to go into something that's difficult or, you know, messy, problematic, unpleasant.
Yeah.
So that, those things, you know, quite important, really.
Yeah. No, I think they're very important. I agree with you. I think the data. I mean, you speak to anybody, and it's all about data wherever they sit in the business. Because if you're right, if you get that data quality piece right, and you're able then to move it across the business and understand what it means. I think there's two things about data within insurance. First, how do you use data to process your business? You know, enable your business, the flows to, you know, be as seamless and frictionless as possible. So that, you know, that's kind of one lens to look at it. The other one is that actually, if you have data quality, you're able to then interrogate that data to find out insights to help with your thing around the customer.
Yeah,
but if you don't, if the data quality isn't there, then you have neither of those two outcomes are available to you.
Yeah, this is you're absolutely right. I mean, this is the problem, is that this just becomes a kind of IT, you know, but you know, kind of one of those string balls that's in a big knot, you know, where you're just trying to unpick it all the time, instead of actually, what is it that these you know, what are we doing here? Other than, you know, obviously we're saving cost or we're making things efficient, but you've got to focus on the customer needs. You've got to have them there front and center all the time, because as you say, otherwise there's no real impetus to say, let's get the data and fix problems for people, you know, get them the products that they need. It's going to be just a big mess of, let's go for 59,000 projects that all try and solve the same thing, but you never unpick the ball that's in a big knot. You know, that's all it feels like to people when they're then the customers of the product. So if this is the model of the future, then you need some radical kind of thinking around it, I think, in terms of this. And arguably Blueprint 2 tries to do some of that within its, you know, its aims, but it hasn't achieved those yet.
No, indeed. So I'm very much looking forward to next week. If you're coming along, great. It should be a great day. Lots of people, so that's good. And I'm sure we'll come back.
Sort that by the end of the day, obviously, won't we?
Yeah, of course. This time next week, this show will be a footnote in the history of how we sorted out delegated authority.
In one day.
Yeah, in one day. I hope not, because I want to bring it back next year. But anyway.
Well, yeah, it's like claims, isn't it? I mean, it's been going on for a long time.
Yeah, it has. That's for another show. Right. Okay, let's move on. Thanks, mate. That was good. I enjoyed that. Let's wrap things up. But before we do that, Spanish fans, Ben, what are we talking? Are we talking things to keep it cool in hot weather? Or are we talking?
Well, no. This is local news, basically. I don't think we've quoted Leicestershire Live recently. No, but I bet Gary Lineker looks at this, because he's a Leicester lad, isn't he? So this is just a funny little story, really, but it shows what the internet can do. Again, Harbour Town FC, a club I don't particularly follow. They're in League Division 4 or something. Anyway, they're a long way down the league. And a couple of weeks ago, they were descended upon by over 100 Spanish football fans, and there they are, all cheering in the stands. I imagine they don't normally get that sort of crowd at Harbour Town. So they're wearing the Harbour Town, also known as the Bees, yellow kit, and chanting and singing in Spanish. Southern League Premier Division Central clash with Bowden Park. Unfortunately, Harbour Town lost, despite that turnout of support.
Were they intimidated?
I don't know. Yeah, they're probably shocked. So they're probably like, "What the hell's going on?" And then they lost 2-1.
Yeah.
So what's happened here is there's a YouTube channel which is La Media Inglesa. Look at that great Spanish accent. I don't speak Spanish. Or LMI. Covers English football matches for Spanish-speaking fans across the world. Who knew? And they have 440,000 subscribers. And they started to organise trips to UK games, and they all voted. And there is a link here. There's a Barcelona guy. The founder is Barcelonian. Is that thing Barcelonian?
It is now.
He's Barcelona born, anyway. That's what it says in the article. I like Barcelonian. Spanish, Barcelonian. And he's called Ilie Oliart. And he got involved with this club, invested in it, and that was a little link. And all these people on this this website voted to support this team. And so they all kind of they said it was the perfect club with the right values to share with our audience. So they wanted to get to know the history of the town and the facilities, and that's what they did. And they all turned up, 100 of them, and they were very pleased. The Spanish supporters, they said the 7th league is much better than people would think. The professionalism, the facilities, the quality of players, it's massive. Atmosphere is good, and they say they might come back, these 100 people, but maybe not if they get into the playoff. They said so they're not that keen on it. They're not going to spend the money on the Ryanair flight to rush back. But yeah, so it's this is a whole new thing. Who knows who's going to turn up next at what event and what club?
Yeah, amazing. I love that story. It's brilliant.
Maybe they could. There's a one out there that's about conferences of the world, you know, and you get like 100 Mexicans turning up at your next claims conference. They'll all be there. You'll have to have a translator for them.
Brilliant. Would they all be in sombreros just to keep the stereotype going?
I expect Mexicans, some of them wear them. But they you never know. It could be.
I'm going to try and make that happen for London Market Claims in the autumn. Let's do that. Yeah. I'll have a Mexican stream.
You could have a Mexican wave.
Hey. Yeah. Great. That was good, Ben. Thank you. Right. What are you doing this weekend, Ben? Anything good?
No, not a lot. My wife is away, so I'm just here looking after I don't really look after them. They're quite old, my kids. So we'll
holding the fort.
Yes, I don't think I'll do. It's gonna be nice and warm, so might have a barbecue.
Yeah, that'd be nice. Yeah, might go. I think our Ben, has threatened to go fishing.
Oh, Ben, your Ben.
He's my Ben.
Yeah, we're not
our Ben.
I hasten to add.
Yeah. So
people might think that.
Yeah, they might do. They'd be going, "Why are you in different rooms if you're a couple?"
Yeah. Like Morecambe and Wise.
Yeah, we'd do it from bed, wouldn't we?
If we were Morecambe and Wise, yeah.
Yeah, absolutely. So yeah, might be going fishing. So that will be that might be fun.
Yeah, that'll be good. Yeah.
Good. Okay, right. Thanks for tuning in, everybody. We will see you next week or on Tuesday if you're coming along. Have a good weekend.
Have a good one. Bye.
Bye.